Guys, happy Monday. Welcome back. So last week we discussed how we were right up against this channel, and we pretty much, ended up having a fake breakout, coming back to the inside. And again, we're still back, right? You can kind of see we have kind of been sideways, in this box, though we have exceeded and come down lower. Majority of the moves for the past month have been, within this range of 4030 and 3952, right? This 80-90 point range is pretty much where most of the market has been moving. So when range, contracts in such a manner, right, you can kind of see if I, put the Bollinger Bands on, you can see that, this expanded move is kind of starting to squeeze. So what tends to happen, right, after a range breaks is either tends to have a massive move, right, in either direction. So why is this important? The reason this is important is also because of where we are in the market, right? This is the downtrend. We failed once, and though we are opening above the downtrend, and on the daily, you can see these are the EMA clouds, right? We are holding above the EMA clouds. So today is really important in the sense that we have opened above, right? EMAs are holding well. And if it fails today, that means that, the market is gonna, come back down to the second range, right? Whereas the second range box, it's at 3,800. So that's why it's really important, because whether it's bullish or bearish, we're gonna have, really nice moves in either direction. And that's kind of why I want to emphasize where we are in the market. And this is, as you can see, as soon as I switch the time frame to the 4-hour, you can see how this has been an area of rejection, right? In the past, like a brief breakout and fast failure. So again, we are sitting on that box, right? And we are against the 4 hours. So today's open will be very important, right? If the market can break over, let's say 4050, we round off, let's say if it can break over 4050, then it would be, pretty close to conforming a breakout. I would say the best level for confirmation would be 4080, because I think if we can get over 4080, then there's honestly nothing stopping it. I think that would be the start of the uptrend to 4300, right? But as I've mentioned in the past, and even last week, I still fear, because of the choppy nature of this chart, I still fear that the market, could go down to retest a prior level, right? A prior low before we, head to the 4300. So in both cases, I am swing bullish, right? But short term, I am sensing that unless we get a clean break of 4080, I could sense a little bit of danger this week. So that's something I did want to bring up again, right? And I did want to discuss both the scenarios. We look at NQ, you can kind of see how we did, break out of the long-term range, but we are, against significant resistance. So either a failure here is going to, retest the, end up causing a retest of a prior level of, buyers before it moves higher, or if it can, break out of this major supply zone, right? The market, honestly, right, it shouldn't have any problem or any resistance moving further up. So yeah, kind of a crucial zone where we are. And we also know that, we've had a couple of inside days, right? So today or tomorrow is going to cause in a very large range breakout. So that's why it's important to have levels, right? And whether you're bullish or bearish, you should be able to pivot depending on which way the market moves. So now let's, kind of move on to Wix. So again, we have discussed this chart in the past, right? And we got the anticipated move into that 30 channel. But if you are market bearish, the Wix is, very weak. You can see it's made a series of lower highs. It's still holding its triangle uptrend, but this area, right? This area to 20.5 is the last level, right? This is the last level of support it has. If Wix doesn't find buyers here, then to be very honest, there is no support till 18.5, but I don't think even this long-term, trend line will kind of help it. We might just get a small bounce and then proceed further. So that's kind of why it is important, right? If you're a market better, to see Wix establish support. Otherwise, Wix has, it's kind of indicating a bullish market run. But the dollar, on the other hand, right? I discussed this in Discord, and right, we got a bounce off this crucial demand zone, and it hasn't really done much, right? We know that this is the downtrend line. It has broken out of the downtrend, and so far it's kind of just, forming a doji-like candle. So this is the minimum bounce it needed, right, before it can continue further. So even if you're bullish or bearish, I still say the dollar, even if it retraces to 102.6, given that bigger picture, we did, break out of this downtrend. It, generally it tends to happen in 3 waves. So we could, go up to test that 107 level. So that again is market bearish, right? Though the wicks looks kind of not great, I would still place more emphasis on the dollar. So just something to watch out on. If the dollar breaks below this, then there's honestly nothing stopping it down to 99. So that's kind of what I had on the dollar. Let's look at the 10-year. And on the 10-year, we know bigger picture. This was the channel, right? We broke the channel, found support at the bottom of this channel, had our B wave. Now we're kind of coming down for that C wave. So it's kind of important to, kind of notice where excuse me, where this bounce, actually gets rejected. I do think it can bounce as high as 3.7 before it comes down lower. But if it starts to break over 3.7, 3.8, then the C wave, potentially may have ended here. And we could be on the start of a larger wave 5. But I do think we still have a little more downside, right? Come test this prior level of demand before it has that one final, wave 5 push higher. So yeah, that's all I had on, the market and the market structure. Now we can kind of look at this week's watch list. And the first one I had is Roblox. And I want, to people kind of look at it both ways. As you can see here, 45.4, 45.5-ish is major resistance, right? So just like the market, most of these stocks are against key supply levels. So either the market is going to reject the supply and come back down, or it's going to break above and it doesn't really have any resistance till 52. So you can play it both ways, bullish and bearish, right? So again, looking at how it's just kind of gone sideways in a choppy manner, right? I do have just the bear version of the chart drawn, right? So if again, you can kind of see this is the downward resistance line, right? If 45 acts as resistance, right, and we start to come down, the market, right, the main break, right, if you short here, there is support at 41.7-ish, right? The main break would be here. If Roblox break 41.7, then honestly, it probably doesn't have any support, right, down to 39, 37, then 35. So that would be the more bearish version of the chart, right? And the bull version is pretty simple, right? You break over this resistance level of 45.2, you have a direct line of access to 52. So yeah, that's why I wanted to have Roblox on this week's watch list, right? I do think that it could, be in for some volatility given how, last week we kind of stayed within a range. So that's what I had for Roblox. The next one is Google. It's very similar to Roblox, right? This level at 107 to 108, right, is supply. Actually, I'd say even this level at 105 to 107 supply, you either going to reject the supply, come back down to test 97, or you break over 107. There's no resistance till 115. So those are kind of the bull and bear levels on Google. The next one I had is J&J. And again, this I saw some flows, someone on Discord, right? I think Riley posted it, right? And this chart, I mapped out my levels, and you can see that this is trend line holding a support, and we have kind of gone sideways. So yeah, it could have a nice bounce, right? If it can break over 154, its minimum target would kind of be, 157. And if it's even more bullish, can try 160. So yeah, this could potentially have a bounce, and this is a prior level. As you can see here, is a prior level of demand. So yeah, now or never for, J&J. And the last one I kind of had is TSM. Again, the reason for that is kind of had a doji and then a bearish engulfing candle, right? So if it does, break below 92, it could again cover this gap at 89 and test, 88 to 87 area as well. So that's the reason I had TSM puts. Is we know that banks are having a bounce, which means tech and semis, right? You can see even SMH, I zoom out, we are against resistance. So tech and semis could have, more of a pullback if banks keep bouncing. So Yeah, that's why I had TSM on this week's watch list. I hope you have a great week. Thank you so much.